So much. Thank you everyone for having me here. I'm happy to stop and take your questions and answer as we go along, but I think we have quite a bit of an agenda and I've got quite a lot of ground to cover. So I will get started right away. So when I was thinking about the conversation today and based on my experience here in the last 2 years, I thought it would be a good idea to just give an introduction to what mobility insurance means, and then deep dive into the auto insurance market, and and even further go into the U.S. auto insurance market, which is like one of the largest ones in the world, right? Then we can talk about the evolution and challenges for auto industry, and you can extrapolate it to other insurance lines, but assuming that auto is the higher on the regulatory side for the property and casualty market, things will be slightly easier as you go into other industries, other lines within the industry. Then we'll look at the insurance transformation strategy that PwC put together and look at some of the immediate problems that we can use to jumpstart transformation and how do we accelerate them, and opening up new opportunities, and then we can open up for Q&A. So with that said, I think most people know this, but I just wanted to bring it back. Insurance as an industry is based on the law of averages, and it started like by 1000 BC or something like that, where the idea was if there are going to be losses, then it has got to be borne by others or everybody else participating in the event. So think about maritime transport of stuff like cargo between different ports in the Mediterranean. And if they got into a storm and they had to jettison some cargo, then the cargo that actually made it to the port would kind of have to compensate the cargo that was jettisoned. So it was like a way in which they wanted to make sure that more trade was kept was followed. And the same thing holds good for auto insurance, right? We expect people to be driving on the road, and there will be accidents, there will be casualties, there will be losses, and those have to be borne by others who just participate in traveling on road in cars. And that is like the fundamental process, if you will, of the insurance industry. Now, if you look at mobility insurance, the auto insurance is one of the largest industries. If you add in bicycles as well as motorcycles and all around the globe, it adds up to about 1.5 trillion, slightly less now, but it is, as we increase the reach, it keeps on going. And we talked about losses, typically 1.5 trillion by premiums. So the loss ratio is how much of that money is paid out in losses, and the number comes out to be about 60%, and the range is between 50 and 70%. So organizations that are very well run are able to bring that down significantly compared to the ones that are not running very well. And a lot of organizations within the insurance sector are mutuals, and if you look at the dividends that are paid out to the participating members, they are minuscule. They are really, really small compared to the premiums that they collect. Now, if you focus very specifically into the US insurance industry, it was about 313 billion by premiums last year, and they expected to grow to 385 billion in the next 5 years. US has got 51 jurisdictions and typical renewal periods of 6 months, and very, very high regulation, and loss ratio typically fall in the 70% category. There's only one outlier that I can find of, that is Progressive, that does much better than 70%. They come into the low to mid 50s consistently. So I call them the black magicians of the insurance sector in the US. Auto insurance industry is not evenly distributed and neither similarly regulated. There are a whole bunch of states that are pretty large. So California, Texas, Florida, and New York are by far the top four markets, and they constitute a very large chunk of cars, as well as losses that come in, and of course regulation, just because of the size and the way these states are managed and run. In terms of coverages, you can think about them as just four categories. So liability. So liability comes in under two coverage areas. So bodily injury or property damage. Then there is collision. So when you get into a crash or something like that, you kind of like need compensation for that. And comprehensive or other than collision. So acts of uh, where you don't collide with something, but something happens to your vehicle, like a tree branch falling, a hail, or something like that falls under the comprehensive. And then there are other peripheral pieces which make up a very small percentage of premiums that are brought in uh, by by carriers. Now, liability is required in one form or another across all the states. So there is very common piece there. And then there is a special piece category under liability called uninsured and underinsured motorists. And we'll be talking a little more deeper about it. But if you think about those broad categories, that's where a majority of regulation as well as uh, opportunity lies. But don't forget the other pieces. That's where that's a significant chunk of money as well. If you think about the insurance industry in the US in terms of regulation, uh, there are pretty much three categories of regulation. So one where the regulators are appointed by the governor, one where they are appointed by a commission, and one where they are elected. And 37 has got appointments by a governor, two by commission, and 11 states require election of the insurance commissioner. The insurance commissioner uh, is needed or is charged with the authority to protect consumers and keep the market stable. So they kind of see themselves as protectors rather uh, than innovators, even though some of them are definitely on the innovative side of the business. Excuse me. Now we talked about like um, the dollar amount and how these different states uh, uh, are organized. But I wanted to kind of like uh, play with how the industry operates as such, right? So if you think about it, uh, you have to start somewhere. It's a cycle that kind of like keeps on running. There are policies in place that offer coverages, and premiums are collected based on and on the policies that are effective. Now these policies, these with the and therefore people are able to drive their vehicles on the road. Once they are on the road, there will be accidents, there will be losses, and claims will be made against those policies. And the claims follow their own life cycle, and that generates a whole lot of information called loss data or claims data. Now that data is in conjunction with the market performance or organizational performance information is used to create proposals with regulators. Now, this is very unique to the auto industry, where you can propose and say, here's how much we think is reasonable, and the regulators approve it. And once the regulators approve it, we most our carriers come up with what are called as a rating variables that are very prescriptive on by zip code, by vehicle, by the type of driver, how much can be charged, what can be the surcharge, what can be the discount, under what conditions. Uh, all of those details are written down, approved, and once they are approved, insurance carriers are able to write policies, and that cycle continues. So typically, uh, Some states, it's just file and they will rubber stamp anything that comes along the way. Some states look at every single line uh, of language of the formula, look for very detailed and descriptive information to uh, to say yes or no to the proposals. And just to give you an idea, we have filed uh, in the states of California, Texas, Florida, and New York over 6 months ago, and only Texas has approved it, and they took about 9 months to approve. California has been sitting around on our thing. They bring up objections that we kind of like answer every 2-3 weeks or so, and that's been going on for over a year. Florida is the same thing. New York was sitting on it for a while, and now they keep on coming up with a whole lot of objections that we just have to answer, and it's hard. So what I basically want to say is, like, this cycle is run one way or another, and it is quite difficult and quite cumbersome, as well as uh, uh, as costly for organizations. So getting into the market has got its own barriers, and then staying current is even worse, because you have to describe exactly how you operated, what are the losses, what are you expecting, and ask for changes. And there are laws and regulations that restrict changes in pricing, and that keeps insurance carriers in a difficult position for most of their operations. So in terms of the how many people run this kind of a operation, it's pretty much the pretty much 2,510 insurance carriers that are registered with the NAIC that can actually do this work. But these carriers have to have licenses in individual states, and those licenses are valid every year, and they get renewed every year based on their own regulations. So uh, needless to say, it is complex. And in addition to carriers, there are agents that have to be registered as well, that can act as that can do a bunch of things that carriers can do as well, but they are not allowed to take a bunch of other things that carriers are allowed. So different levels of operation there. Now, we quickly touched upon, like, quite a few of these things, right? So the auto insurance market can be broken down into personal as well as commercial. The commercial is smaller piece of the market, but equal. They are very, very similar in many ways. So we talked about a long product development cycle. On average, you can think about it as 2 years from start to finish if you want to enter a market with a new product, at least in the auto class. Now, this is for the highly regulated part of the market. The other pieces that are not so regulated, it might be a lot easier, but there are several steps that are common across across lines that kick in. So if you think about the overall, excuse me, I just need to drink the water. If you think about the pressures and challenges that the industry faces, there are always downward pressure on premiums. It comes not only from competition, but also from the regulators who would like to keep insurance affordable to the maximum amount of people possible, drivers or businesses. The loss costs keep on going up, even though the post-pandemic time frame, this is a little out of whack because of supply chain issues in the auto industry. They do not go down. The loss costs just seem to keep on going up. Inflation is one piece, but technological evolution is the bigger culprit there. Excuse me. So this is a given, and most organizations think about how to work in this scenario by default. the competition is not easing up, even though these challenges exist, right? There's always high competition, uh, and the competition comes up from the fact that most of the policies are up for renewal every 6 months or every year. And when they come up for renewal, that is the time that that consumers shop around, try to find a better price, and then if they do, they kind of like jump. And uh, I saw some study by JD Power recently that said that just with the onset of the pandemic, uh, the shopping for better rates went up significantly. I think it went up to 2 times or something like that, and it has stayed elevated even after things have kind of like come back to normal. Regulators are looking at more and more rating variables. For example, if you have applied for an auto insurance, you might have realized that credit score has got a significant influence on your premiums. Now, a lot of states are either banning the use of credit scores or are in the process of legislating against its use. And there are other factors that are coming in. Neighborhoods that used to be charged larger premiums cannot do that anymore, and things like that. So the we I saw the regulation things that are on the docket for this legislative session coming up, and it is quite large for the auto insurance market. And this is complemented with the high degree of innovation in terms of like what technology and how people are using uh, the the data that is generated like in within the vehicle with the onboard devices with cell phones, with drivers and other telematics to kind of like try to find ways to overcome the challenges that are coming in through competition or regulation. And I would like to just spend some more time on the technology stack that these carriers will be like are using. It is growing, right? I mean, uh, insurance is not seen as one of the leading adopters of technology, but they do have a significant footprint and investment over a very long period of time, which they do not retire very easily and try to run for as long as they possibly can. And the tech stack is quite complex and growing. So every time we come up with a solution and introduce a new technology stack, we have to be slightly cognizant that we are adding to a problem that everybody recognizes is a problem within the industry. So I'm going to kind of like go through the PwC blockchain maturity model. PricewaterhouseCoopers put this together some time back and kind of like lay down where things lie and how we go about it, right? So I think most of you should be familiar between these 5 levels, starting with beginner, intermediate, advanced, expert, or visionary. Um, if you think about the projects that are out there that are kind of like successful or have proven something or have kind of like given us like some insights into what works, right? So Risk Stream Collaborative is a consortium of a bunch of insurance agencies, and they have been trying to figure out a way of reducing claim fraud, and uh, they are pretty much focused on 2 or 3 areas. So information handling, information exchange between carriers, claim fraud reduction, as well as subrogation. Now, subrogation is an interesting topic for those that do not know this. Um, it's think about it as if you get into a crash, you will get a settlement right away based on your policy, but the insurance agency will, the insurance carriers, if they are 2 different carriers, will have to decide who gets to pay and whose fault it was. And there's a lot of transfer of risks that happens behind the scenes, and that is called subrogation. And there is a big way of doing it, and that I think that's a problem that the Risk Stream Collaborative solves. They have been around since 2017 as well, and it's like a black box. They have not put out any press releases or any information in the public domain for the last 2 years. So uh, I know I met somebody yesterday at the Insurance Innovators Conference, and she said that they were meeting today as a advisory board to decide on a few things, and she was not at liberty to discuss what was going on there. So it's alive, it's kicking. The progress is not known. They do not publish it out. So that's, and they consider themselves to be in the beginner stage. Now, the intermediate level is slightly better, I must say, but slightly more advanced. They're looking at a much more holistic approach to insurance. And B3I was one of the big things that came back and said, "Oh, we will completely transform and we'll do this, that, and the other." And they started out in 2017 and they closed down in 22 for the lack of funds and adoption. I think they try to to completely uh, upend the industry and found that the technology stack kind of is hard and difficult to navigate. So that level is like something that we will eventually go to, and uh, this is the time where you kind of like build POCs, proof of concepts, provide value, show value, so that you are able to move into the advanced stage where you have a test network, you have an application that does some piece of the work, just like AIG or Standard Chartered, that does financial capacity management across organizations. In the expert level, you're looking at like workflows that are automated. So think about it as Lemonade using blockchain for claims management processes, or MetLife using a blockchain network for their underwriting purposes. So there are applications that have demonstrated within an organization that they can get better return on building a system that does that work. And finally, there are application platforms like the AXA's blockchain platform that would fit into the visionary bucket. This is a platform that does travel insurance. And for those guys who do not know of this initiative, and there's a lot of speakers at the Insurance Innovators Conference about their learnings and what they have found. These are the guys that provide travel insurance. So if you're flying and you want to buy insurance for delays or whatnot, they have got a system that keeps on tracking flight delays, and that information is available in the public domain. And if you are owed money, the blockchain automatically issues you a payout, and you will be notified that you got a payout. So they are demonstrating a complete platform that would work with automation, no humans involved, and it's operational. And they tout a lot of possibilities in that domain. Now these guys are operating in a non-regulated market, so they're able to develop a solution and showcase what is possible. And I think they set a bar for where the insurance industry can be in the future. It's just a matter of finding a way to get there, right? So I'll quickly go into the different levels, and I kind of like showed the examples, but I didn't really talk about what those levels mean. So at level 0, the organizations are typically aware of the technology and the application. They want to understand its benefit, and they start exploring the technology with some kind of like experiments, if you will. At level 1, they definitely think about proving the concepts. They want to test the environment in a limited way and evaluate how they can leverage the pilot and tests to kind of like move on to the next level. At level 2, they are thinking about deployment, either in a production or a pre-production environment. They want to optimize some performance and are looking for efficiencies, and they want to think about integrations with not only their existing systems, but other applications and other networks out there. In the level 3 area, think about this as like the time when we showcase and talk about the value that we bring to the industry, right? This is a new way, a new innovative way of leveraging the technology to make things better. At level 3, you are essentially showing leadership in the adoption of the technology and potentially collaborating with other organizations, with other industry players or other players that interact with you to actually deliver value and improve not only your performance, but the performance of the other players that are involved in the space. And at level 4, we are thinking about reinvention of the industry itself or transformation and really showcasing impact. So if you think about the AXA's platform, this is where they are, right? I mean, they have proven or shown to the industry that uh, you can operate an insurance operation completely on blockchain and it works, and users are super happy about it. Now they do the operational piece of it. There are other pieces which are much more costly and require a lot more effort that need to be proven, and I think that's where a lot of us come in. OpenIDL, for one, is looking at that as well. So uh, I would like to pause there and just look back at the segments or the categories of applications or elements within a tech stack, right? So every insurance carrier will have more than one application under either 15 or 20, between 15 and 20 categories of application that they are using. Some of them are very specific to the insurance industry, like underwriting, claims, risk control, actuarial, reinsurance, legal and compliance. I think that goes in different ways, as well as special investigations. But it's not just one application. Every one of these boxes will have multiple applications within them, and there will be multiple tech stacks that are powering those applications. So the IT costs are always high, and the experience will tell the insurance industry that they are going up. And these are the guys that keep a tab of their numbers for a very long time. And so they can look back 10, 20 years, maybe even 50 years to try to be able to figure out exactly where they lie in terms of costs. And just because they work with risks that well, we can expect a little more scrutiny whenever we make claims in this industry. Uh, so that brings up, well, if that's the scenario, there's an industry, there's a lot of money that is being poured, there's a lot of money that is being spent, and they have a stack. What could be the way in which we can approach the transformation strategy? There's a bunch of messages on the chat, so let me okay, see if I have any questions. So nothing from me there. So what can we do, right? As technologies, as people who are trying to innovate, trying to make things better, what are our options? And I think of us as having 4 options, right? Can we reconfigure the existing stack, make it better? Can we supplement what is already available with new things that gives the insurance carriers or agencies another revenue stream? Can we complement what is already existing with services that help in better performance of current activities that they do? Or can we completely replace what already exists? And I'll give you an example of each of this, right? So for reconfiguration, think about identity and verification. Think about what ITN provides as one of the ways we are able to provide a better service. So I've had this conversation with a lot of you, and I'll continue to talk about this for as long as I need to. But most of us have a verification of insurance in the form of small cards that are mailed to us every 3 months or every 6 months based on the insurance carrier that we are operating, and sometimes every month. that tells you when the insurance is valid for what car, for which driver, right? It's a paper, it's a small strip of paper that comes in mail. uh, the bigger and larger carriers have applications that keep it up to date, but not all jurisdictions accept that digital form of verification. So you're still looking at that small paper clip that comes in your mail, or you have to take a printout, and that would be acceptable. But that's the state of verification today. Now there is a big opportunity in front of us, with the especially with the ITN, to completely reconfigure or rethink how identity and verification can work. And I think that is a super easy, low hanging fruit that we can work on, and there's a lot of work being done there, right? The second piece is the data reporting and compliance. That is the part where the OpenIDL network comes in play. Uh, Most carriers, especially the large ones in all jurisdictions, are required to provide their operational as well as performance data, uh, through statistical reporting as well as financial reporting. And we are trying to automate the process by the use of blockchain. So node operators, which are pretty much carriers, can keep all their information in one place within their own network. Reports would be run, deduplication would happen, and you would make sure that the information submitted to the regulators is in compliance with the state laws, and there's 51 different states to 51 different jurisdictions to satisfy with the for compliance. Now we are trying to automate that, new way of doing it, but I think it's just a reconfiguration that a lot of organizations are happy to jump in and support. In terms of supplement, we talked a little bit about AXA's travel or rental vehicle insurance, or like there are other service providers like rideshare insurance that kind of like are supplementing what is available through the insurance industry right now. So think about it as like new lines of business, new streams of income, new streams of value that you can provide that supplement their existing businesses, and if you can build a system based on top of that. In terms of complement, I think I kind of like messed up a little bit there, but don't worry about the verification piece there. But think about it as vehicle builds and uh, uh, um, vehicle up to date. So most of the vehicles today require like some kind of software to be roadworthy, or to be up to date in terms of safety. Uh, it's very hard to have that information using the older system where you had 10-digit VINs that kind of like just captured class of vehicles. But now with specific vehicle VINs and build details as well as update details, you kind of like are able to provide services that complement the information that the insurance industry would need to verify that the vehicle is up to date, as safe as it can be, and the exposures are captured in a proper way. Now we could provide a big value there, and I think we are looking at ways in which vehicle data or vehicle status data is able to be sent back to the insurance companies so that they can assess their risk a lot better. In terms of replacement, I think we looked at the way AXA uh, uh, or a bunch of other players like even Lemonade are showcasing how the traditional or like the new systems like such as policy management, claims management, underwriting are able to be replaced with blockchain based technologies. Now, this is a this is a harder thing, especially because we do not have too many vendors who play in the place working with us. But if we could recruit, or I'm actually talking to quite a few of them, trying to get them uh, to to kind of participate and play in, we might have a good opportunity, because then we all grow as as an industry. And I think everybody understands that to be successful in the world of blockchain in decentralized and distributed environments, we have to cooperate, right? And that's the whole point there. Now, with that said, what are some of the intermediate problems that we can solve, right? So we kind of like we as OpenIDL, AIS has been participating in that process for a while, uh, is looking at like significantly reducing the time that industry-wide data is available not only to the regulators but also to the insurance carriers. Now, I'll give you a couple of examples, right? So the information that is submitted by all the carriers, uh, like in 2019, or we'll kind of like have the what happened in 2019 will be uh, will be uploaded or needs to be put into the system by the end of 2020. The regulators will assess, validate, ask questions, uh, create reports in all of 2021, and publish a report in the first quarter of 2022, which is when they tell you how the industry performed in 2019. So you've got a 2-year lag between what happened and what is being like published. Now, I'm aware of two reports that come from the NAIC. One is called the Auto Insurance Database Report, and the other one is the Home Insurance Report. They are trying to come up with a similar nomenclature for all lines of business so that the industry database report stays consistent across and they are able to publish that information. The regulators as well as the carriers would like to reduce that on an annual basis. So for example, they would like to provide the information for 2022 in 2022 or just in the first quarter of 2023, so that those reports can come in the second quarter of 2023. And to do that, OpenIDL is building all the infrastructure to try to do that. They want to go even further and say we can do a database report published every year, but we would ideally like a quarterly update so that any changes, any errors, or anything that needs to be highlighted could be found at the end of the quarter rather than waiting a year or waiting a year and a quarter to get that information. So there is value to both carriers in terms that if the regulators recognize that the costs have gone up, they will be more receptive to taking in requests for rate changes, and that is good for the carriers. And regulators always will have the most up-to-date data, and therefore they can make the determination of allowing or at least providing a partial adjustment to things as they go along. And that I think would be very, very valuable, not only for the industry, but also for consumers operating in the market. Uh, if you guys were around for the last conversation, we talked about the uninsured and underinsured drivers. So there are a lot of drivers on the road today in the US that do not have insurance. I think by the last estimates, we had about 70 million drivers that fall under that category at one time or another. There could be several reasons, right? You don't have insurance, your driver's license has expired, and therefore you're not allowed to drive, or your vehicle registration has lapsed, and therefore it's illegal to drive. Now, these people get into accidents, they cause damage, property damage as well as physical damage to pedestrians, to bicyclists, to other vehicles. And there are costs that are incurred and somebody's got to pay. And the carriers at an aggregate level pay about $13 billion in losses to underinsured or uninsured drivers. Now, they just can't be paying that without collecting in some premiums, right? So we as legal drivers pay about $84 per car per year just to make sure that we are protected or just to contribute towards those uninsured and underinsured drivers that are plying the roads today. So we'll talk a little bit about like different ways of solving it, but we feel that blockchain is ideally suited to overcome the problems that are associated with uninsured and underinsured drivers. Driver rating factors. Now, there are several ways in which drivers are rated, and not all of them are fair to the driver. Like, for example, you may be a very good, conscientious 19 or a 20-year-old, yet your premiums are going to be high. And similar to the other of your peers who drive like crazy, like they think that the streets are racetracks, and they do not have the ability to actually control the car that they the ability or the skill to control the car that they are driving. But the current system have no way of figuring that out. Now there are telematics based rating factors that are coming up, which kind of like look at what are called the ABCs: um, acceleration, braking, cornering, and speeding. Uh, that gives a little bit of information, but ultimately do not take into account the skill, the experience, and the history of a driver in rating like your premiums. Now that's the direction that everybody seems to be thinking of, but we are lacking in terms of where we go. Now, large companies like Progressive, for example, has a very good idea what their drivers are like, and they are unlikely to share that information with anybody else. So as a driver, if you are getting preferential treatment or preferred ratings or preferred pricing, you can't take that to other carriers and say, I'm a good driver, and therefore you can give me a better premiums, because other insurance carriers have no way of figuring that out. Now, that is something that blockchain can solve, where you make the driver ratings portable. Truth and event information. So this was one thing that came up yesterday when we were talking about generative AI. A lot of vehicles now have sensors or like cameras that capture events that are happening. Now, how do you know that the event actually happened and was not generated? Uh, that's the kind of place where blockchain plays a very significant role in coming back to work for us. Uh, think about uh, regulatory reporting, digital assets and liabilities, capital capacity, like making sure that people who want to operate in the new world, giving them the capacity, giving them the money to do it, and more. So there are problems that we can kind of like see today that we can solve for, and that are not just like core information, that is core insurance that is regulated, that have a significant opportunity that we can kind of like solve or tackle as we know it in the industry. Now, based on the conversation that I've had in the last 2 days, I kind of like put this into like very simple bullets. Like there have been a lot of innovators talking about a lot of big things, but I feel, based on the conversations that have been happening in the conference just in the last 2 days, smaller problems are generally easier to solve and easier to convince uh, uh, others that there is a value there, right? Um, Smaller problems, the problems that are harder to solve, if they are small problems that are easier to solve, they would already do it. But just because they are harder to solve in the current technological environment, think about it as easier to solve with blockchain, and then we kind of like are in business. More cross industry you go, the better it is. Think about replacing technology and getting rid of the old stack. There's a whole lot that needs to go away. But this requires that the game will have to be an incremental improvement. When you look at foundational elements, uh, one of the one of the smart people that I met yesterday said something very, very interesting about the insurance industry as an aggregate. It was not a pointer, it was not a bad thing or a good thing. It is just the way things are. He said you cannot expect a hockey growth in an insurance industry. It is going to be an upward curve, but the pace of like in the pace at which you grow up is going to be very slow. They won't let you die, they won't let you thrive, but they will keep you at. And if you keep at it for a long enough time, you will find that you have improved. And that's the way you should be thinking about accelerating blockchain in the insurance sector. So get in it for the long term. Think about replacing the technology, working across the cross technologies, and look at harder to solve using current problems, current technologies, but easier with blockchain technology. So when we are working in this community, I think we have all the ingredients to make a difference. Now it's just trying to figure out how best to go about doing it. Now, just before we go to the end of here, I would like to just like bring about like an example of like the way we have approached it, right? So if you look at California, the auto insurance market brings in about $37 billion in premium. And if you look at incurred losses for uninsured motorists, just uninsured motorists, that is about $1.3 billion on average, right? So there's a lot of money that is being said, but the regulation in California is pretty large. So we look at the other top 10 states. There are 14 million vehicles causing about $3.9 billion in damages to carriers across them. And we could pick one of those other states, for example, Alabama or North Dakota, and then prove that there is value, and then bring it to the other states and say, look, we did this, it's a smaller thing there, but in case we want to bring a similar solution to you, you will make a significant difference in your business. And that's the approach I think that has worked for us for now. And I wanted to make sure that I share it with everybody, just so that don't go after the big market that is harder to crack. You will get there, but pick a smaller one that might be easier to prove value. And when you do that, the guys who are actually feeling the bigger pain will automatically see value and kind of like be convinced much better. So again, coming back to the blockchain maturity model, you do not have to be a visionary and go there. I think it is an ideal thing. It is great that we can do that, but it is moving up the chain. And consider that the industry is at level 0. There will be some large organizations that have experimented with level 1, but even if you go from level 1 to level 2, you are doing a big favor to the industry and helping them progress. And you have to have the patience to wait for a few years, quite a few years, as a matter of fact, to go to level 3 or level 4. So I'm not very enthusiastic about the prospect that we have to wait, but I know that it is hard work and it is going to change lives for the better. So I'm willing to make sure that we keep on chipping at it one step at a time to try to make progress, and overall we'll get there. So that's all I had for today. I don't know if I went over, but I think we should be good on time. But thank you so much. I'd like to see if there are any questions that you want me to answer to.
Yeah, if you have any questions, feel free to unmute and go ahead and ask. You're also welcome to send them in the message chat where I will read them aloud, whatever you prefer.
Griffin, I have a quick question. This is Steve Douglas from Denso.
Oh, go ahead.
Ash, I was wondering if you could expand or have any information about the insurance telematics world compared to like the OEM telematics world. Meaning, I know insurance companies have maybe their own telematics tools that they use. In some cases, they may be interacting directly with like a GM OnStar or a Tesla telematics system. Do you have any information about how that relationship's working and how it's going to go in the future?
Unfortunately, I do not have information because everybody keeps them under wraps. But I will tell you two things. So when you think about telematics, this was a very big eye opener for me. I've been keeping an eye on telematics for a long time, but I never really thought about this uh, until I had a couple of conversations, and I was like, duh, how can you not think about this way? So telematics can be considered as two things, very, very distinct and very separate from one another. One is point in time telematics. So for example, there, uh, based on my driving history, I could be categorized in, say, level 1 through 10. Like drivers could be categorized in level 1 through 10. That is very valuable information in pricing at the time of quote. So before the policy goes in effect, they want to know what kind of a driver I have, and my history can point to some number in that scale of 1 to 10. And there's telematic backbone behind it. Go for it, right? So I was in talks with Arity, and they are collaborating with quite a few organizations to bring that scale as a service to insurance carriers. So super useful. I'm trying to figure out how we can partner with them to collaborate on that. So I will keep you guys updated on things as they evolve in that direction. The second piece was like driving. So who you are is like one piece, right? Then the second piece is how are you driving on an ongoing basis? Now that does not have a very large impact in terms of premiums, as most people have realized. Uh, the older models did not do a very bad job, but ultimately the way the law of averages work is you just have to distribute the cost, and everybody's got to take their share of load. And that load does not reduce just because you are a very good driver. It reduces, but not by significant amount of time. So there seems to be a little bit of hesitancy in real time, pay as you go kind of uh, programs and telematics. Uh, they are more geared towards incidents and the truth at the time of incidents. And there has been a lot of talk about it, but no clarity in terms of collaborations and availability and accessibility of that information moving forward. I'm sure there will be ways, and we just have to think it through. But as of now, uh, it's hard to tell. I'm not really sure that they actually collect that information and are able to do anything about it as well. So just my 2 cents based on like a few conversations over the last 2 weeks where that was the hottest topic and everybody wanted to talk about it. So you're spot on. We want to know, but nobody is willing to make a comment.
Awesome. Thank you so much. Appreciate it.
You're welcome. Thank you for the question.
Yeah, thank you, Steve. We have another question from Les in the chat, who's asking you to please describe the AXA blockchain platform. Could you, who's behind it? What are they doing? Could you just give like a brief overview?
Okay, just give me 1 second. I think I will find this and give you a link to their just give me 1 second. I had this open, but somehow it just, my browser quit and it's kind of gone. So I'm going to add this link here so that you are able to see their platform and how it works. So these are like investment managers that have invested in their blockchain, and they have an offering for travel insurance. And they very clearly say how it works. And it's very, very simple, right? You buy insurance when you're doing your booking. And if your flight is delayed, you get paid out. Automatic, no human, you don't have to make a claim. Nothing needs to be done. The system takes care of it. And they built it only for that purpose.
Awesome, thank you. So please feel free to take a look at that link. I know I will. We have a few minutes. I think we have time for another question or so. Brendan asks that you may have touched on this, but what is OpenIDL's current status on capability and industry adoption?
So OpenIDL has been running projects for a year and a half, and it's interesting that the track that we took was to prove value first and then set up a network. So OpenIDL will be having a test network where we can kind of like share information. So we have proven that we can do statistical reporting. We have proven that there can be a harmonized data store that can be done to answer, that can be set up to answer data calls for various purposes, for property, for catastrophes, as well as for auto. Uh, and once we set up a network, we will have, I think, four state regulators on the network. We have 5 different carriers that are operating, and we can offer the node as a service to all of our members. We've got 800 members, and those who will take up on it will be able to use that. So we can definitely envision a world not too far in the future where all of our members are able to share the data that they have to send to their regulators over the OpenIDL network to us, and we can consolidate that and report on their behalf to the regulators across all 50 states. Does that help?
Yes, thank you.
We welcome more participation. So ping me. I'd be happy to connect you with the right guys, and you could be part of the network, and we want it to succeed. So we want to make the most out of it. Definitely.
Ash, if you have time for one more question, could you
Sure.
comment briefly on your hopes, expectations for the integrated trust network and how that might interact with OpenIDL?
Go ahead, Chris. I did not get the question. One more time.
Yes, sorry. Could you comment on your hopes for the ITN and how that might interact with OpenIDL?
Yeah. So OpenIDL is definitely a closed network optimized for information exchange with the regulators. So we want to bring in the policy and claims data and as well as financial data to make reports on behalf of carriers to the state regulators. And sometimes we don't even want to be in the picture, where state regulators can ask a question and get an answer very quickly. So it's going to be a closed network operated by the 2,500 or so entities that are very well known and operating in that regulatory environment that needs to work there, right? But we have to interface with other systems outside, and that's when the ITN comes in. So having a common registry for drivers, for vehicles, for policies, we see ITN as a place to kind of like transact and work with and keep current, rather than bring those services into OpenIDL. So there will definitely be a bridge, but we definitely want to leverage the work that ITN is doing and not duplicate it, so that we can focus on growing together rather than competing with each other.
For sure. Thank you, Ash. I think that is all the time that we have. So thank you so much, Ash, for joining and speaking with us today. I loved your presentation. Thank you to everybody else for joining. We will be, as usual, making a recording available on our website shortly. So keep your eyes peeled for that. And we hope that you'll join us at our next lecture. Thanks, everybody.
Thank you, everyone. Thank you for the opportunity.
Have a wonderful day.